This is Ryan Mallory for SharePointer.com. Today is April 2nd, 2015. So now you can do and say stupid things and actually be held accountable for them because it's not April Fool's anymore. So anyways, and when I say do and say stupid things, probably the funniest one yesterday was Tesla when they decided to come out with a Tesla W product, I think is what it was. Anyways, all the algos went nuts on it, popped the stock, and it was just an April Fool's press release. So, I don't think Tesla really cares about the people behind the scenes that are running algorithms on their stock. I think they just thought it would be a good joke, and a lot of people are kind of upset about it. I kind of find it genius and sort of funny. Now, if I had been in the stock, would I have appreciated it? Let's say I was like short or something. I don't think I would have liked it at all. I probably would have had a much different view on it. But perspective, I guess, is the big key here. You have a different perspective when you don't have a dog in the fight. Anyways, you got all this market randomness. I mean, seriously, since December, I think it's safe to say since December, yeah. The market has been an absolute chaos, whatever you want to call it. It has been totally nuts. There's no clear direction. There's no path to either going up or going down, in terms of where are we going forward. The market just, it's like however it feels that day when it wakes up, that's the direction it's going in. We had a sell-off yesterday. We had a sell-off the day before. We had a huge rally the 2 days prior to that. We have a little bit of a bounce today. And all we can make from it is nothing. There's really not much to take away from it. The only thing that I see is that there is some support here that's being held on to two different levels. First, you got to sort of look through all this. I'm going to take this off just for the heck of it because it clouds up the chart too much. But you have this rally off of the October lows, and I'm ignoring. I'm basically drawing this chart using the candle bodies off of the October lows because it gives a little bit of a different perspective. A lot of people are just drawing them off of the lows from October. When you do that, it shows a little bit different of a picture where the trend line is actually broken here, and I don't think there's any way that's better than the other, but I want to highlight this because it sort of creates a perspective that not a lot of people are looking at, and that is it's bouncing perfectly off of this trend line. So if we break it, then I think that adds a lot more bearishness to this picture, but also you have this double top that's forming in the short term here. Double top being, two tops that are pretty close in height, or as far as how high the price action went. So you have a double top here, being the first one, and then this is the second top, and 2040 would be around that confirmation. If it breaks that 2040 level, then you have a definitely a different market, and one I think you can get a lot more aggressive to the short side with. But you also have, let's see here. I think it's on that 30-minute chart. Yeah, let me do that. Let me switch this to a 30-minute chart. If you look at it here, you have a little bit of a support level that it's been bouncing off of. So once again, if going forward, if we drop below 2049 on the 30-minute chart, that definitely gets it a little bit more bearish too. But ultimately, it's about what we do with this 2040 level. Are we going to break below it, or are we going to stay above it and try to rally this market? What also adds a little bit of confusion to the mix is the fact that we're making all these higher highs, and then recently we're making higher lows, and now all of a sudden recently, combined with those higher lows, we're making lower highs. So this is the highest the market went here back in late February, but now we have one peak here and we have a second peak here, and what that means is that the highs that the markets are making, off the rallies, they're getting lower and lower each time, which means there's not that gusto and not that momentum that's carrying the market to new all-time highs. Instead, it's getting smaller and smaller. But in the same time, the coil is getting tighter because we're making higher lows on the bottom. So, if you're looking for big moves out of the market, don't, because it's not happening yet. Now, if we can break above, I think honestly, if we can break above this like 2085, let's be a little bit more affirmative about it. If we break above 2089, I think there's a lot more opportunity for this market to rally in the short term, because that would be creating a short-term higher high and put us in a position to possibly even challenge the previous highs from March. So that's going to be extremely important going forward. Once again, if we can break above 2089, I think that gives us some short-term bullishness. Below 2040, I think it lends itself to some definite bearishness going forward. All right, you guys got that? Now, let's talk a little bit more about randomness here, because a lot of people are getting frustrated in this market, and I share that frustration, because it's not easy when there's not a consistent path that the market's following, when it's like up one day, down next day, up one day. In fact, there was a period here where if you go from like February back here on the 13th and then 17th, and you fast forward all the way to March 27th to March 30th, there was a gap there between those two time periods where the market could not finish higher 2 days in a row. And that was the first time we had seen in like over 20 years where that kind of a phenomenon occurred. So then you have another one where you have like a stair step action where you're down, then you go up, then down, then up, then down, then up, then down, then up, and then really down. But, once again, it adds to that storyline that the market's inconsistent. It's very random. Predictability is very difficult to come by. So what happens? A lot of traders will start holding positions through stops because they're getting tired of getting stopped out. Bad mistake right there. Keep taking the stops. Keep getting knocked out, because the one thing you want to do is to be able to preserve your capital during this difficult time. Even if you're treading water or losing money, you still want to preserve your capital, because if you don't, you're gonna get slaughtered, man. And I have the hardest time being able to convince folks of that sometimes, because we're a instant gratification society, to where I get a trade, I want profits. I want to trade, I want to make money. And sometimes part of the trading, the most important thing is not the fact that you can call the stock picks or whatever you want to call them. What makes you a good trader is how you manage the risk. So you have all these newsletters out there saying, I make great calls on the stock market. I am great at what I do. I got a great setup, whatever. And they base everything off of their stock picks. And then you start seeing they get these like 8% losses and 10% losses. But as soon as they get an 8% gain, woohoo, they're touting their horn, talking about how great of a stock picker they are, but they're not managing risk, man. And when you're getting into this kind of a market where there's no predictability, where there's no there's pure randomness and there's no direction, that's not a time to abandon your discipline and your risk priorities. That's a time to double down on risk management and to make sure that you are following your trading plan to a T. Okay. And yes, that may mean you get churned out of positions, but guess what? That's the stock market. Okay. I told somebody the other day, you got to get tough in this kind of market. It is not easy. Okay. If this market was trending higher or lower, the profits would be easy. It would be flowing like the salmon of Capistrano, right? But it's not like that right now, and you have to be willing to take some hits while you try to get through a difficult market. Because here's the other thing: we don't know when the market's going to get out of this funk. Okay, you have the talking heads on CNBC that'll say, "Oh, quarter 2 is going to be better, or quarter 3 is going to be better, or quarter 4 is going to be better, or 2016 is going to be better." But nobody knows that. Nobody knows what the market's going to do tomorrow. So you can't predict the market with any kind of certainty. And then and when the market gets this unpredictable, that principle is more truer than ever before. So you gotta fight through these periods. You gotta keep trading. You gotta, don't go full 100% long and don't go full 100% short. Nibble at the market. Be willing to get in and get out and try to see what's going to work, because you don't know what that next trade will do for you. Manage the risk on the current one. If you get stopped out, move on to the next trade. That next trade might be the one where the market starts working in your favor. The stock might start catching some fire and you might actually start seeing some profits. But in the meantime, don't abandon those risk principles. Don't think just because you're getting stopped out of positions that somehow your trading has gone amok, because it hasn't. I promise. I've been through millions of these markets. Well, maybe not millions, okay? But I've been through plenty of them. And you know what? When you stick it through and when you stick to your principles and you stick out to the correct way of managing risk, when that market finally does start trending up or down, you're going to be really glad that you stuck it out during these hard times, and you're going to become a better trader for it. But if you abandon it right now, you'll never reap the fruits of your labor. You'll never reap all that hard work that you put in during the difficult time, and you will find yourself blaming someone or something for the reason why you weren't able to be profitable in the stock market. Because for a lot of people right now, this period from December through March and into early April now, this is the first time that they've experienced a market like this, and they don't know what to do. And so instead of sticking to risk principles, they abandon the stock market. They say, well, this isn't for me. You can't make money in the market. Oh, it's the HFTs. Oh, it's the algo traders. And oh, it's because Janet Yellen keeps yapping or whatever. And so they want to blame it on somebody because it makes them feel better, and they want a scapegoat, basically. But the market doesn't care. The market doesn't care if you participate. It doesn't care if you don't participate. But the only way you can the only way you can benefit from the market, okay, is not to try to force your will upon the market, but to let the market come to you. And then when the market does finally start trending and breaking out or breaking down, you can start riding that trend line in that direction. And but in the meantime, you got to stick this stuff out. So I know I sound repetitive. I've felt like that for the last 4 months. But that's what we're dealing with right now, and that's why we got to be so principled to what we know that works. All right, couple of positions here. I'm going to wrap it up. I'm short Netflix. I really like this trade. It hasn't really done much today at all. It's up like 0.3%. The market's up not much more. Actually, the market's up 0.3% as well. But great hedge against my two long positions, which is GCI, which is rallying nicely today, up 1.6%, and then UPRO, which is the 3x of the S&P. But no sign that it's wanting to break up. Now, if it does, we get out at 424 because that's where the stop's at. But right now, I mean, it just looks like it's ready to fall a good chunk. And if it can get down into the below 400, it's got this whole gap that it wants to fill here. So that's really exciting there on this short if it can play out to its true potential. The other one's GCI, breaking out nicely. It's given up some of its gains here in the close. That's unfortunate. But overall, it's been a solid day. The chart looks pretty solid. I'm not looking to get out of that. And then UPRO, really, it's based off of my S&P analysis that I've already done. But not much out of it today, about 1%, but it's holding its own. It's looking good for going into next week, as long as it can hold that support that we talked about. A couple of ideas to consider. MAR, I like this as a short setup if things get nasty next week. If it rises above 330, I'm sorry, off of the highs from 330. So if it gets above 81.81, I'd say get out of it. So there's not a lot of risk that you have to take on this trade, but it looks very bearish to me. Got like a triple top there going 1, 2, and 3, and it's already confirmed it. So I think it's got lower prices in its future. SEE, another good one. Definitely trending lower. Gets below that 50-day moving average. I think the bottom could fall out of that as well. On the long side, you got OKE. Not breaking out today, but getting very close to it. Someone mentioned in the chat room earlier today that you got to be careful with OKE because it does tend to sell off late in the day. We've seen that here the last 3 days on OKE, so that's something to keep in mind going forward. But overall, it looks like a pretty good chart or potential to move higher in the coming days and weeks. KBH and TOL is the next two I want to look at. KBH is breaking above that 200-day moving average finally after struggling with it the previous 3 days. higher highs, higher lows. Looks really good here. I think you could get long with a stop loss. Probably it might be a little bit too much for me, but no, I could probably swing this. Probably put a stop loss at like 15.29, and then TOL, another home builder, breaking out nicely between the two. I like TOL better than I do KBH, and then finally IPG, and that one's not quite there, ready to be broken out yet, but if it could get above like 22.18, 22.19, that's where I would say go long at. Put a stop below, I don't know. I'd probably do the stop at like 21.42. All right, that's going to do it for today. Y'all have a great weekend. Happy Good Friday to everyone. The markets are closed tomorrow, so enjoy the time off. Enjoy it with your family. Happy Easter, and God bless you all.